Hello, Face. How's everyone doing today? Looks like Santa imbibed a little bit too much, turned over the sled. Hi, Kevin, Arena. Why? What's going on, Kevin? Hi, Hugo. Michael. What's going on for me to stay safe? Why are you worried about me? The new variant? Yeah. Mutated? Yeah. Okay. What isn't mutated in our world? So we have a red day. And boy, was the S&P tough because it looked like we were going to fail. And then in the last hour Friday, we pushed up, failed. So at least we're getting an understanding of what could happen to the market when the dollar turns. Jury's still out if this is just, showed this last week that we had a little throwover. I actually thought over the weekend that we would get one more low. I wasn't looking for a gap up. I don't know if anyone was. Congratulations. Yes, we have the conjunction today of what is it, Jupiter and Saturn. So maybe that's the energy that we're seeing today. So, I don't think one day or 2 days is enough, but, in these markets, anything can happen last couple of weeks. So the only thing I was prepped for and prepped some of the traders I work with was this on Saturday. So before last night's open, I thought we could get a 3, and that happened Sunday night. See the 3, it's pretty classic. And along with equities, crude took it on the chin pretty good, almost really $3 break. And we'll see how much it can recover. It's already starting to recover. And, even, can I say it? Bitcoin is another 3 drive to a top formation on shorter term TFs. I was talking about this on Saturday. Darn it, keeps bouncing up on me.
And that Bitcoin's been something, huh?
Yeah.
It
But look at
has.
this, Blake. So we had 1, 2, and then 3 right here. So, again, we're, it's trying to hold 22,000, but I'd be pretty careful about longs in anything.
Well,
Yes. Huh?
yeah, and not only did it did a 3 drive into a big 127% extension. So
Okay, cool. So a little confluence up there too.
yeah,
All
yeah.
right. So,
Hey, I just wanted to say hello, but I'll
hey,
be
buddy.
here. I'll let you
Okay.
finish up.
I mean, there is, if you didn't sell anything last night, I don't know what you do today. Okay, I don't think you step in and fade things, fade weakness right away. In
Yeah,
fact, we've
it's
already had
difficult.
recoveries, right, Blake?
Yeah, I sold some dollar Canadian. I got hit on a spike at 129.25. I did not think I was going to get triggered. I woke up this morning, I'm like, whoa,
Yeah.
I didn't think it was going to get there, but I already took it off. But the thing is, yeah, what do you do from here? And we'll
Merry
talk about that.
Christmas, Amir. How about that? That was his big trade going into the year end.
Who's
Remember?
that?
Amir.
Oh yeah.
Yeah.
Being
So,
long the dollar Canadian. So yeah, he
yeah.
already got an early Christmas present.
Yeah. So,
So
what is the reason, Blake, for all this red? Is it really just the variant of the COVID strain?
yeah, I
And
mean, I was just reading, there is the variant under investigation is defined by a set of 17 mutations. Basically, it seems like that this mutation is more easily transmittable, and but not deadlier. It's just it's easier transmitted, which doesn't make the holiday season any easier, and it doesn't make the vaccine. The problem with the vaccine is, and this is something that I've talked in, I don't know if I've talked about it here, but I've talked about it with like the guys and gals in the chat room, and definitely my family. I because this is this is a pulmonary disease. I've always felt that it's going to end up being like it's like a flu, but a flu where every year, we get flu shots because there are mutations and variants. And
Yeah.
so that probably, unfortunately, is going to be the same with COVID. I mean, it's going to mutate, and that's been kind of known the last 6 to 8 months that it will mutate, and that was the big fear. And this is not, when everybody was making like parallels to like polio or whatever, I'm like, I don't, because it was like I said, a pulmonary type of flu-ish, and I'm not a medical professional, but I just felt that, hey, it's probably going to be something that we're going to have to, be vaccinated on a yearly basis, and it does seem like it's that might be the case, and that's unfortunate because that's going to hinder, at least it's going to hinder
Everything.
economic activity now. When people realize that we do have to, treat for this probably once a year, and we're going to have to get some sort of vaccine, then, I think it'll normalize a little bit. People will normalize, or they'll learn to live with it a little bit more. But man, I don't know. It's, but that's what's freaking out the market. You got that on top of the stimulus, which looks to be passing today, but it's a buy the rumor, sell the news type of event. We knew that it was coming. So
yeah, and the market seems to be underwhelmed by it.
Yeah,
I think they expected something more. If I may interject, Blake, since you mentioned like the medical stuff before, for whoever is interested, I know you know that everybody reads like tons of articles, medical articles. Everybody's trying to become, a medical expert or whatever. I had an extensive conversation during the weekend with a doctor friend of mine. He's a great scientist, and what makes him really useful as a source of information is that before he actually became a doctor, he aced a degree in molecular biology in Cambridge. So, his first degree was molecular biology, and then he switched to medicine and became a doctor. So, he has a good understanding, of, how, viruses work and, all the underlying stuff. So he was telling me that, first of all, they now know, like with certainty, that immunity that comes from getting sick from COVID lasts roughly 2 months. And they're now certain like about that. So that means, you got sick with COVID, you have a short-term immunity, but that's it. And that
sucks.
And vaccines, they can't be certain yet. But from what they know so far and what they can assume is that they're going to be giving you an immunity that's going to be anywhere between 3 and 5 months. So basically getting vaccinated once per year is definitely totally insufficient. He also told me, which is interesting, that opposite to what many believe, vaccine is not going to be the solution because of the intricacies, as I explained. For example, the fact that it won't give you like an immunity for a long period of time. But actually, it's like a stopgap because they're actively working on, in essence, therapies. And the problem is actually going to be solved when they have like, potent therapies that, you got COVID, you'll know that you're going to get, your X medicine, and, you should be fine like in a week later with, minimum side effects and, with high efficacy.
Yeah, so, it's like pneumonia. I mean, like my wife got pneumonia twice, and she was treated for it, and got her out of the ER both times. I mean, that's exactly what it's going to be like, Steve. It's like, you just didn't get the flu this year. You actually got COVID, which is similar to pneumonia.
Yeah, exactly. And he believes that no matter what, especially since supply shortages are going to be a thing, he believes that 2021 is more or less going to be lost as well.
Well, that's depressing. Thank you.
Yeah, it is.
This webinar.
I hate you now.
Go away.
All right. I want to.
Don't shoot the messenger.
All right, whatever. Okay, you know what? Let's let Dale wrap up his thing, and I'll get started on the analysis so I can pass it back over to Mr. Depressing. Thank you.
Tamiflu doesn't work. Okay, so guys, I mean, you look at the dollar right here. We do have a chance for a weekly reversal. It's right here. And I'm not sure it's going to be a shortened trading week. I think Thursday is a partial day, but closing back over 90.76, which we're almost at, would be a 2-week reversal on the dollar.
Yeah.
So that may have been it last week. We'll see. I just don't see anything new to do unless you did something last night. So be careful in these very thin illiquid market conditions and reduce size is my advice to you if you want to trade. And you know it's okay to do nothing for the next couple of weeks too, and just recharge your battery and get ready to sign up on our promo and hit it hard in January when, well, people won't come back from the Hamptons this year. Usually they, during Christmas and the summer, they return to New York, but now it's kind of a haven for them to be out there. So, but the volume will return. And if this is one thing I've seen over the years, that if this is the dollar is bottoming and the S&P is topping, that big money will engineer a rally to sell where they want to do it, and possibly in the dollar engineer another decline before the turn. So I've rarely seen important long-term turning points happen the last couple of weeks of the year, but this is kind of a different year, isn't it? So that's it. That's what I don't see today.
Well, thanks, Dale. Well,
but I'll tell you something. It's going to be, and I didn't know till I did research on it, but today's guest, Blake, Harold Malgrim, you ever hear of him?
No,
he served 4 presidents. He was with Kennedy and worked on the anti-ballistic missile. He was with 4 presidents, considered one of the 100 most influential geopolitical experts, and Yale, Oxford guy, and been around forever. Like it would take the whole interview to list all his accomplishments or his CV. But what attracted me after I had him booked, I went to his stream, and he was actually talking about what that there could be the big surprise could be huge dollar short squeeze, and I'm interested in what his narrative is going to be on that. So pretty interesting guest today, so you guys may want to stick around or check out the video later.
Yeah, that's gonna be amazing. And I was just looking at his profile. It looks very, very, very much like this is going to be a very interesting interview. So that's great.
And then we have Charlie Gasparino, January 8th.
Woohoo!
So
Awesome.
So trying to get Jim Rickards still. We'll see, but I'm looking forward to meeting Harold today.
No, that's actually, it looks like a great interview. So you guys are in for a real treat today. All right, guys. Well, hey, I'm gonna go ahead and take over things, the screen here, and Dale, that's I'm actually Dale's putting together a really good lineup for you guys. Remember these interviews. Let me just say a couple of things before I start on some analysis here. Remember what we do for you guys here at Face. Don't forget it's free. I mean, you guys can listen in, and what our intentions are with this Face webinar is to offer you guys good analysis on a daily basis, and with hopes you'll eventually join the Forex Analytics family. I mean, that's what it all boils down to. We have a great community of traders that we that we chat with all day long, and that use our technology and read our analysis. And but one of the things that we've managed to do over the last several years is bring you great content, analysis, and interviews. And Dale puts together a wonderful list of people, influential people in our community, traders. As you can see, like Charlie Gasparino, which is a huge personality in once CNBC, but now he's on Fox, right? Fox Business.
Fox and writes for the New York Post.
Yeah. Okay. And Charlie used to be a CNBC contributor, but he's been around since, since probably just before when I started trading in the mid 90s. So he's been around forever. And but Dale puts these together for you guys to enjoy and listen and get more of a great interview with somebody, rather than just, a few minute or a few second snippet or a minute snippet on, some financial news radio or TV, you can get a good interview with him here. So I hope you guys all appreciate it. And to show your appreciation, when you see Dale or our company tweet out something regarding, what's happening, do us a favor, retweet it. Or if you see us on social media, whether it's on Facebook or, Instagram or LinkedIn, share those events. We really do appreciate it, because we don't ask for a lot. And if you really want to support us, come be part of the Forex Analytics family. All right, I'm done with that. Let's start with some analysis here, and just to parlay what Dale had been talking about as far as the dollar index. The dollar index, we had a nice snapback rally. We were, you have to realize we were at very key levels as it was. Now you had a couple of events that have compounded the last, I guess over the weekend, that really has made it where the dollar had to react. And that is from the variants of the virus that are, that is mutated, that we've been talking about here, over the last few minutes. Then also, the stimulus deal, the stimulus packages, looks like it's going to go through today. And, Steve said it's underwhelming. I think most people expected it. It's probably a buy the rumors, sell the news type of event. Then you have, pretty downbeat talks for Brexit, which is, allowed for the cable to sell off quite aggressively overnight. I mean, look, we're down 236 pips overnight in the pound. I mean, that's a huge sell-off. So this has really, allowed for a snapback rally in the dollar index. Now, the question is, how far can we go? And that's what we're going to find out today. We're going to talk about some, key levels. And I was short the dollar Canadian. I was expecting, you guys know that between the Canadian and the dollar Mexican peso, looking for a squeeze higher in those. Amir came on, was it last week, Dale, where he talked about
week ago Friday.
Yeah.
And all of your analysis when you were talking about the dollar last week, you were telling people, if you want to bottom pick the dollar, the message of Canada holding up well in USD MEX was a sign to you that you had a headwind of a weaker dollar, and USD CAD and USD MEX was not being really pressured as greatly as the dollar.
Yeah, so, you had the Aussie hitting new trend highs, Kiwi hitting new trend highs, but the dollar MEX, dollar Canadian, they'd been holding up. So now
they were tells.
They were tells. Right? Now we already got the squeezes. So now the question is, okay, well, what do I do from here? And this is where it gets a little tricky, because if you didn't, or you weren't participating, how do you participate from here on out? And for me, depending on what happens today, and what I think is happening right now, is we're seeing a little bit more of a sell-off in equities, and equities are going to continue to pull back a little bit, which means that the dollar could still have some room to run. So what I'm hoping for here, and let's turn our attention to the euro. So you can see the euro, we have we have our uptrend line or our ascending trend line, whoops, basically in play right here, right? So if that breaks, which I'm going to make the assumption it's going to. Now the question is how far back can we pull back? Well, would be from 120 to probably 120.50 or 120, whatever this is, 30, 40, somewhere around here. So that is where we probably will continue to pull back towards these levels, and we might actually even be able to do that over the course of the next, I don't know, couple of days. It's quite possible. So sorry, I didn't mean to yawn on you guys. So what we're going to be looking at today is we're going to be looking at the lows today as being support, because if that breaks, or this horizontal these little spike lows break, that should open the door then. So that comes in at 121.20. All right, that's the horizontal support. I think it's key. Resistance now. If you're like, oh crap, I missed this move, and I really would rather just sell a rally. Well, if that's the case, then I think you can probably look for a bounce back up towards 122.50. Maybe this previous support here as an opportunity to be a seller if we get a bounce. But that's how I would approach it. I would wait for a move back up towards, let's call it 122.30. Okay. And I mean, that is the highs from overnight, 122.35. I think if we can get a move back up there, and if you're like a dollar bull and you really want to play the dollar on the long side, I think that's the place to do it. Sorry, I'm yawning. It's Monday, and boy, it's when it's cold and it's dark here, I sleep much better than normal in the summertime when it's 1,000 degrees and where I live. Anyway, here's the cable gap down, sold off. Now look what we did. Let's stop here for a second. Okay. Notice this gap. Let me get rid of this. We're going to get rid of a few of these things. Nope. That's not what I wanted. Okay. Notice the gap right here. Okay. We filled it. We came all the way down to 131.82. Okay. So 131.80. So I think now any dip towards 132.20 is going to offer great support. And by the way, the euro is still bullish. The pound, I'm a little, even though, and by the way, I do have some cable, well, some pound long, not cable. I have pound long, but against the Aussie. And I did sell some euro sterling this morning, but the thing is the pound dollar kind of scares me, because we did close above 135, and now here we are trading well below 130, 133. And I don't know if Brexit's going to get done. It's as we talked about last week, the fisheries has been, it's a big sticking point. And it, if you forget the conversation from last week, we were talking about how Norway tried to join the EU twice and unable to because of the disagreements with, fishing waters. So, I mean, this is obviously going to be a big issue in the EU and with the UK. So, let's see if they can finally get something done. But I don't know. The price action is a little nervous or nerve-wracking with what's happening in the sterling. I think resistance now, 133, and you can see the spike lows here on a 4-hour chart, right? So this would be 133.35. That should offer us resistance intraday. I'm going to put the bias back at range, as much as that, I don't want to, but the fact of the matter is we closed above 135 and then we slumped big time. So we're going to have to keep that at, range. The Aussie though, it's bullish. I know it's down 103 pips this morning. I understand that. But you have to realize that the Aussie is in extreme bullish territory, and any dip now down towards 74 cents, you have to use it as a buying opportunity. Today we went as low as 74.61. Okay. And I'm going to say that 74 cents and 74.60 are key support for the bullish argument. Okay. This is your support zone. And this is where, if I was going to buy the Aussie, I'd be buying it down here. Okay. Resistance. And you're going to, now you have people that are like, oh shoot, I want out of my Aussie dollars. So they're going to be selling on rallies, which that means they're probably going to be selling on, moves up to 75 now. Kiwi. We dropped to, and Paulie called it on his European crossover webinar, which is exclusive for Forex Analytics subscribers, that we'd hold 70 cents. We've had this support zone drawn for, I don't know, a long time, right? So remember, you have to stay bullish the Kiwi while you're above 68 cents. But for today, 70 cents is really critical. And if we break through 70 cents, we're gonna have a pullback. I mean, towards probably 69, 68, 50, somewhere in this neighborhood. But for today, 70 cents is support and 70 cents is holding. And 70 cents is key. That's why I put an asterisk there. Resistance, well, any rally now back to 70 is probably going to find sellers. Okay, let's talk about the dollar Canadian. And if you're new to the face webinar, we do this every day. Just so you know, we go through the same process every day with all the majors. So you know where your key support and resistance levels are, where the biases are. So even if you're trading counter trend, oh, well, I'm trading counter trend. I should trade a little smaller because I'm shorting the euro in a very bullish trend. Yeah, it's fine. Just know that you're trading counter trend. Take smaller positions. That's it. We trade counter trend all the time. I do all the time. Okay. Dollar Canadian. So this is key where we hit today. I mean, that was obviously previous support, comes in at 129.30. I sold it at 129.25. I did not think we were going to get there last night. I had no, when I got up this morning, I was like, whoa, I got triggered. Obviously we overshot it a little bit to 129.60. You'd be lucky today, in my opinion, if we got to 129.50 again. Okay. We're going to stay in a bearish trend because it really is. But that was your opportunity to short the dollar Canadian last night, was above 129. That doesn't mean we're not going to get that shot again, but it's, that's where it was at. Support is 128.35 now. And I think if you get even, close to 129, 129, 129.10, I think there's going to be sellers up there. Now, dollar Mexican peso, you guys know that it was the only one last week we had it on range, and it was unbiased as far as currencies go, major currencies, or against the dollar. That's because we made a higher low, right? So this is range bound, and this is the sell zone between 2070 and 2085. $20.70 is resistance, support. 2020. Remember 2020 was big on the way on the way up. Okay. Swissy. Nice little squeezy out of the Swissy, out of the descending channel. Now resistance is at 89. Well, it's just, we're going to call it 89. Support at 88.05. We're still in a bearish trend. You know, while we trade below 90. So even if we get a continued rally here over the next, 24 hours, you got to be using that as an opportunity to sell into. US dollar, Norwegian krona. Similar. 855. Remember, we wrote that down last week. That was kind of off the cuff because it was channel support, no other fib level support. Well, guess what? It held like, I'm going to use Polly's terms. Polly, correct me if I'm wrong. The Rock of Gibraltar. Is that what he said? He always says that. If you guys listen to the European crossover, that's some Polly slang that he throws out every once in a while. 890 will be resistance. And matter of fact, I think if we get anywhere near now, 86. Remember, this was the double top completion. So now if we get anywhere near 863, that'll be support. So let's
I think Paulie's the Rock of Gibraltar.
That's right. He might be the Rock of Gibraltar.
He's steady, man.
He is.
Can't move that guy.
It's funny because he used to say that all the time. And I'm never up for his analysis because it's in the middle of it's while I'm sleeping.
Yeah.
But anyway, it's always it's
wasn't that a Prudential commercial? He showed the Rock of Gibraltar.
I think it is.
Yeah.
Resistance now for the dollar yen. I'm gonna I'll have to write down 103.90 support. 103 now. If we get any dip down there, you guys know I'm still not trading this thing. So I tried it. Hate it. Nothing's changed. So this is, I'm going to put it in range now, because of that false breakdown. I'd be a little careful with the dollar yen. You guys know I'm not a big fan of it. So just let's go over to the dollar index. So the dollar index, we had a bear flag pattern going into the end of last week. Obviously, we gapped up above this 90.15, and now you have to imagine anybody now. This is your range for the dollar index, right? So if you get any dip now to 90.15, you're going to find buyers because that was overnight. Those are the people that are like, "Oh crap, I got squeezed hard. I need to, cover up some shorts." We are still in a very bearish trend. Now, we had this blue line drawn from last week, right? That's at 91.15, and we spiked up towards 91. So 91.15 will offer resistance. We're probably in a range now between 90.15 and 91.15. So I still think we're in a bearish trend. Let's go over to the S&P. So the S&P, we came out of the ascending wedge. Look what we held. Imagine that, right? That was drawn from last week, 3,600. It's actually just slightly below, but that's the previous high.
Yeah.
So that's going to be key. 3,600, 3,590. That defines the bullish trend right now. We have to stay above it. If you're a bull, we have to stay above it. Okay. Resistance. Now this is where all the people that are like, "Oh crap, I didn't get out last night," they're going to want out. So they're going to want out up here at 36.90. So if we get a rally back, expect sellers up here, right?
Nice.
Right there.
It's really tough, see how they shook everyone out Friday on the close. We were down sharply, I don't know, about 25 handles, and then came back and made a marginal new high Friday. It was really a tough close to take home short.
Yeah, it was, of course. Yeah. They don't make it easy for
they don't. And the minute you turn your head, it happens.
Yep. I agree with that. Let's talk gold really quick. And then I'm gonna, turn it back over to you, Dale. But
okay.
Gold, interesting, right?
Yeah.
This is drawn from Friday, mind you. I'm gonna go ahead and move that over. We drew that out on Friday. We said, hey, if we break back below here, which was the inverted head and shoulder pattern, we negated it. Remember?
Yeah.
I said, hey, if we break back below there, which was 88 or 1880, we would dip back to the support, which we came pretty close. I mean, 1850 is now support. We're back above 1875. I mean, I'm going to venture to guess now 1900 to 1850. That's your range now, probably going into year end. So, and you guys can have fun with gold, and I'm going to leave it at range. I'm not going to put it back at bullish right now. Okay. All right, so your bias chart is finished. Here's your bias chart. So if you guys want to take a picture of it, go ahead. Dale, I'm really excited for the interviews that you have this week. I mean, you have Tracy.
Yeah.
Yeah, you have who else you have coming in this week?
Peter from MCM, and Peter.
Yeah, I've followed him on Twitter for many years, and he's a very good. He's a very, very good person to follow. But it's worth your time on Wednesday.
You know what? Harold just sent me a DM on Twitter and asked me if I knew Tracy.
Oh,
and I said, well, I've been interviewing Tracy for years, and he goes, she's outstanding. So
she is awesome. Yeah, Tracy's great. We had her on the Trader Summit. Our last Trader Summit, and she's always been a really big supporter of what we do, and so we're really happy to have her here. So all right, guys. Well,
all right,
Steve,
Blake.
Stelios, how you guys doing?
Hello, everybody. We're good.
Happy Monday.
Happy Monday indeed. Christmas is coming, or holiday trading is here. We can see today, right?
Yeah. And so how do you feel about this nice COVID shenanigans we got going on today?
Well, for people who read our blog post, which was out late yesterday, and we tweeted it this morning again, I think we all agreed that there are quite a few risks in the way things were going, and I think they're starting to manifest themselves. So do I think, we buy the dip and we keep going? I don't think so. But again, I'm not a doctor, but I think the way things are going, it's not the way I would want them to go. Let me put it that way. I don't know what you think, Steve.
Yes. Well, Steve just said next year, 2021 is lost.
Yeah,
the big extent.
God, you're so bumming me out, Steve. I'm gonna go.
You see?
I'm gonna go.
My wife was telling me the same. She was like, "Oh, you shouldn't have told me that."
Yeah.
Hey, actually, I'm gonna let you guys. Jokes aside, I'm gonna let you guys take over because I have to jump over to my trading office.
Okay, go ahead, Blake.
Webinar.
Okay, thank you, Blake. Thank you very much.
But hey, I wanted to say for those of you that I'm going to reiterate, we have 10 days until the 1st. We are going to have a New Year's pricing special for Forex Analytics. That means that if you want to try out Forex Analytics, do it right now because you get 10 days for $1, because you can't try it when we're in our discount rate special, or what do we call it?
You can't get a trial. You can't get a trial.
So this is the time to try it. And yes, you have a few days of holidays, but if you really want to see what we're doing throughout the trading session, you can jump in the chat rooms. Oh, Amanda's in there. She popped in there. There's Stelios just put in the bias chart. You can actually go through and see, oh, here's all the different charts that have been uploaded. Just, this morning, Polly, Steve, I've uploaded.
Talk about intelligence
$1
gathering.
max. Yeah, I mean, but if you want to see all the chatting that's gone on for the last couple hours, let's see. And this is Christmas week. I mean, there's nothing going on. I mean, obviously we had some activity last night, but you can see this is when I got up. Oh no, that was even then, before then. So somewhere, I guess it was right around there. Yep. So this is where I got up, somewhere around here. And this is all the chatting that's happened in the last 3 hours, 2.5 hours. All right. And that's on a holiday week. Our chat room is where it's at and where it's happening. So if you want to be part of what we do, it's $1. Try it out. And then, even if you decide to do the light version for $19 a month and you're like, well, the chat room is not that important, but I want to, I like the technology and the alerts and, my app going off and getting analysis that way, then it's $19, so try it out. All right, guys, I'll let you take over now. I'll see you guys on the daily roundup, which is only for Forex Analytics subscribers. I'll see you guys in 4 hours. Thanks.
All right.
Thank you,
Okay, Blake.
Thank you.
Hey, Stel, EG got to 92 again. See, you didn't miss anything.
Yeah.
Good patience.
Yeah.
So what do you think now that it's back there, you still like it, or?
I'm starting to get a little bit worried.
Yeah,
I must admit, I've been relatively, not sure, but I was relatively confident that there's going to be something agreed. But, they're leaving it really late. Plus, what worries me is this new COVID strain. I have all these, all these people, my friends and family who are in the UK, and especially London, and they're saying, look, this is not good, and the measures are really severe now. And, no matter what happens, these things, they're going to be felt for a long time in the economy, in the UK economy, and I think global economy as well. So, even with the Brexit deal, I think there might be problems with the UK and the pound. So I'm a little bit nervous now. I'm definitely not selling the pound. I mean, buying euro sterling or selling cable, but I don't think it's a no-brainer anymore. So I'm just gonna see. I have this thing where I rarely trade in the last 10 days of the year, because you can see price moves like we've seen today, and it can just chop you out. So I'm watching price action, and I will decide as it goes. But at the moment, I don't have. I'm not doing anything.
Okay, buddy.
So the UK, we've had. There's still no progress on Brexit, or at least no firm announcement. So the more this continues, the more the pounds are going to struggle. In the US, we have today, apparently, is going to be the voting of the $900 billion package. I think it was something like $600 payment to people's accounts, which everybody said straight away, that's nothing. Well, let's make it $6,000. Who cares? Print the money.
It's just one more zero. I mean, come on.
One more zero, yeah.
Don't be cheap. Yes,
exactly. But bottom line is, we had some market volatility. I was amazed by metals overnight. I woke up actually in the middle of the night, and I checked my phone, and I saw silver being up like 6% or something like that. I'm like, oh damn, I missed that boat. But it's getting a little bit. The markets are getting a little bit nervous, and frankly, if we do see a proper equity sell-off, then metals have to follow. I don't think they're going to be as sold as hard as they were in March. I think the market has learned this lesson, but they're going to be liquidated as well. So I think we may still get a leg lower in metals as well, which is what I'm waiting for. I have said to myself, I want a weekly close above 2650. And, we got to 27 today, but now we're back below, and it's not a weekly close. So as soon as that happens,
even a daily close.
It's not a daily close. Yeah. And that's what I decided, and I'm sticking with that. When it was at 27, I was thinking, damn, I've just missed it. And there was a tiny bit of FOMO, but I said, no, I'm just going to stick to what I said. And they just came back down, thank God. But overall, I think we're going to continue to see awkward price action going into year end, and let's see. We outlined all these dangers on our blog post, all of us. Blake, you, me, and Andre, and whoever else, Greg, and whoever else wrote. But I think we're far from being in this bliss of risk on, nothing matters in the world. We're all going to be great. Unfortunately, I don't buy that. That's why I'm basically in cash, mostly in cash.
Yeah, although it doesn't really matter what we buy, it's what the market.
What the Fed buys.
Yeah, it's what the market thinks the Fed is going to buy, actually.
Yeah.
Because, if you have the Fed on the other side of the trade,
Yes.
or any central bank for that matter, it's not an easy trade to take, right?
No, don't fight the Fed. Don't fight central banks.
Yeah, that's why I love metals, because in essence, you're not fighting the Fed. you're actually going along with it.
Yeah, exactly. And they say don't fight the Fed. That's, I never go against that. The Fed always wins, and the central banks, they will win. They will get the asset price inflation that they want. End of story. How do they get it? Which direction, or not which direction? Which path do we take? Okay, that's different. But I just feel that we were saying this late last week. We're saying everybody now knows the dollar is going to hell, equities are going to the moon, and end of story. So I kind of agree. I think in the medium term they are, but in the short term, I think we're in for a few surprises. Yeah. Otherwise, that was really, this reversal today was caught me a little bit by surprise by the severity of it. But buy the dip brigade is still here. They're trying to bounce. And
of course they are.
And they will keep trying. Yeah, otherwise we had no data today, nothing, and I think there's very little data this week. Not that it matters. And I think
even if we had, I don't think the market would really care about data. It only cares about,
Yeah, I think everybody's just waiting for Christmas and the holidays and just to take a few days off, and I think we all need it. And as I wrote on the chat room this morning, I think everybody should be really, really careful. There are great opportunities to make loads, just like we saw this morning. Look, the intraday move in silver was what, 8%?
Yeah, quite amazing.
Amazing opportunities, but amazing opportunities to get burnt. So my advice is, pick very carefully.
Yeah, volatility is always a double-edged sword.
Exactly. Pick carefully, downsize, have your stops in stone, and be very careful. And good luck. Yeah, that's it for me.
So, as you said, Stelio, quite interesting moves.
Yeah.
Now, from a technical perspective, I actually jumped for a minute, like in the chat room, to mention the stock indices, although the stock indices are obviously not the only markets that are moving. That's more than clear. But for me, it's quite important, since risk is always in the forefront, especially now that policymakers move everything based on risk on, obviously. So when I jumped on the chat room, we were more or less at the lows of the day. And what I actually showed is that in the short term, the S&P had indeed incurred technical damage, but at the same time, the Nasdaq had not broken down yet. It was actually testing, this confluence of supports here, and the same thing applied to the DAX. Different type of formation, but more or less same type of deal. So the DAX was like, testing a key area of support, but it hadn't broken down. So since that happened, we've actually seen a rebound. We've seen more or less a pullback in everything that had happened prior to that. So for the time being, what remains the case is that the DAX has not incurred any real technical damage, not even in the short term. Yes, it's selling off quite strongly, but it hasn't broken down. The same thing applies to the Nasdaq. And the S&P is actually trying to crawl itself out of the hole it had dug, trying to get itself back within this ascending wedge. Now, having said that, admittedly, there are a lot of elements of a possible short-term reversal today. And, we said multiple times that, sooner rather than later, we should see all the recent trends reverse for a period of time, most likely a short period of time, because everything was really overdone. So, although admittedly, I expect the trends of 2020 to continue in 2021. Nothing can move in a straight line. So the question is today the first day of, this type of a price action? We had some, let's say, fundamental triggers. As mentioned before, one of them was the realization that COVID is far from being over. We got the new strains in England that are like 70% more contagious. We got at the same time a relief package that was, the minimum expected. So that didn't help either. So that might be the beginning as a fundamental, trigger to this type of a move. So what happens from here? And, most importantly, how do we confirm? As always, today is a Monday, first day of a week, which is a good thing. I mean, it's a good day to, actually see some type of a change in gears. But what's the first thing we need to do is wait for daily closes, because, for example, you could have drawn 3 different conclusions today just by looking at precious metals, for example, right? Precious metals were all over the place. They were like flash crashing at some point. They were first of all, they were really much higher tonight. Then they were flash crashing a few hours later. Now they've more or less stabilized. So what happens from here? Wait for the day to finish. Let's see what type of candlesticks we get by the end of the day. Now, ignoring the candlesticks for a bit, what do I see when I look at silver, for example? Right, this is the 4-hour chart, but it's the same type of information I have on the daily. Just looking at the 4-hour chart, it helps you see the formation, a little bit larger, so a little bit better. The only thing I see on this chart for the time being is that we got the market flash crashing after testing a nice horizontal support resistance area, but it fell short of breaching through the triangle we've broken through, right? In essence, we more or less retested that area and we're rebounding from there. So technically speaking, has something changed here for silver? In my opinion, no. The answer is it hasn't. Having to do with gold, here's the 4-hour chart. Here's the 4-hour last candle. If you look at it on the daily, you'll notice that what happened so far today is that
looks like today's lows are critical across various instruments.
Yeah, is that we tested, initially we were testing this channel's resistance. We got rejected from there. We then flash crashed to a horizontal support resistance area. We're now more or less unchanged on the day. So has anything changed here? No, there is still a very good chance that we found a low a couple of weeks back when we traded down to 1760. At the same time, though, we haven't managed to break through this corrective, in my opinion, corrective. I mean, I think it's quite clear channel. So, is there still a chance that we can spend more time consolidating the multi-year gains before we can actually continue higher? Yes, there is a chance. As I've said multiple times, I'm not going to be selling any of the metals. I just want to be a buyer. I don't want to be a seller for no reason. Moving forward, look at copper, right? I mean, expectedly, with the sell-off we got in stocks, copper sold off as well. What is copper doing as we speak? It's testing this ascending wedge trend line support. So let's see what happens from here. I mean, a breakdown from here, I think, is going to be a very nice technical signal that we're finally, after March, because keep in mind that copper has been in an uptrend producing higher lows for, what is it now, like 10 months, more or less? No, 9 months. Yeah, 9 months. So for 9 months, and it in essence had no real correction lower, right? I mean, every corrective move it had, it was more or less consolidating over time than just correcting, in price. So, at some point you need to see some type of a move lower. That is what we drew some time ago. More or less, we can see that happening, unfolding. I've said before, we've cleanly breached through this like 330 area. So I think, at least revisiting 330 to test it as a support is going to be, a healthy corrective move. We can even correct even lower than that and still be in an uptrend, right? So let's see what happens on a daily closing basis. We still haven't broken down, but admittedly, RSI was diverging, momentum was waning, conditions were clearly extreme, and copper was very, very overbought. So yeah, we might be about to get something like that. Let's hope so. Now, very similar to copper, at least in the short-term price action, is crude oil. If you remember, I talked multiple times last week about the potential of crude oil topping if this proves to be an ascending wedge, because that's an if, of course, right? You can always have a formation like that to only break higher from it and accelerate higher. If that was to happen, then you get another type of a scenario, which is a blow-off type of top, right? Because when you have an ascending wedge like that and you actually manage to break through the resistance, usually what follows is some type of a blow-off type of price action where price goes vertical for a short period of time. Everybody capitulates and it's like, oh my god, I can't do this anymore. I can't even consider shorting crude, and short after that you get like a big reversal. But for the time being, the risks after today's candlestick, as it seems to be forming for the time being, is that this is a short-term topping formation. I'm going to stress out the part short-term because I don't believe that crude is actually going to be topping here and continuing like a bearish trend. But I do think it's in good need of a corrective move lower. So similarly with copper, I think crude is going to tell us, and the S&P, because if you noticed, the S&P, copper, crude oil, all of them have the same type of formation, right? And all of them more or less are on the precipice of breaking through that formation, which technically is going to open the door for a deeper move to the downside. So where would I be looking for crude to move? Assuming that we break through this, I think that clearly the first area of support should be considered to be roughly here at $42. So that's $5 lower. That's more or less 10+% to the downside, not too shabby. So I think we can at least go down to that level, right? We might be able to do more than that, but we should at least revisit 42 if this proves to be like a short-term top here. Now let me check some of your questions. Needless to say, by the way, you're not going to be surprised to find out that the Kiwi has a similar formation, right? Here is a commodity currency that looks exactly like that. So Kiwi is already breaking down, at least on a daily basis. Let's see what happens. Aussie didn't exactly have something like this, more or less like a channel. Although if you focus more on the shorter term, I guess you can, I guess you can also derive some kind of a wedge from this one as well. Let me see. Let's see. Yeah, something like this, right? And the opposite applies to pairs like, because the dollar is in the other side of the equation, obviously. Here is USD NOK. Nice attempt of a rebound higher. We've already pared back most of the gains, but still quite a nice reversal. Here's USD CAD. Right, USD CAD breaking through. USD CAD can also be interpreted as a descending wedge, right? I had two formations drawn here. One of them was a channel. The other one was a descending wedge. This one. Let me erase this so I make it more clear. Right. So yeah, we seem to finally be, trying to reverse higher after big periods of sell-off in all these instruments. I think these reversals are going to prove to be corrective, but nevertheless, for the time being, they're reversals. And I think that if we confirm today, we might end up having a decent follow through. I mean, decent enough for somebody to make money trading this, right? Here's also USD MXN breaking again through this previous channel's trend line support. Let's see if we can actually close above that. That's also probably going to be indicating that we're going to see a bigger rebound coming. But, for all of that, I mean, what the dollar does, and especially, what commodity currencies and commodities and precious metals are doing, the one that's holding the keys for any move is this one, S&P. S&P, is like the global barometer for risk. So, it's all about risk on, risk off. We confirm risk off conditions. Everything else should move in these directions we talked about. We don't confirm today. We should, see stabilization and, probably consolidation. In any case, admittedly, from a risk reward perspective, now that we've pared back some of the losses, the earlier losses of the day, I have to say that from a risk reward perspective, shorting here makes sense, right? It does make sense. Because we have enough elements to say that, okay, there is a decent chance that we're going to see this type of moves unfold for at least a few days. We're off the lows of the day, substantially off the lows of the day. We're back testing this broken wedge. So, if you say that...
Thank you, Steve.
Oh, we're done. Okay. So we're like 2% of the highs, right? So risking 2% to make perhaps... I guess we can go back to 3,400, right, Dale? It's not bad.
Yeah.
It's not bad.
Everything, and yeah,
short-term
some
trade.
people are even talking 34 and then another launch. So we'll see.
Yeah.
Day
Okay.
at a time.
So enjoy the interview. And as I said, I think today's an interesting day. So let's see what we get by the end of the day.
Okay. Thank you. Nice work, Steve. Welcome to Phase Herald. I am promoting you to a panelist, and with your illustrious career, it's not much of a promotion. Welcome to Phase Herald. Your mic on?
Yeah, I have it now.
Yeah, great. Harold, it's really great to meet you. It's an honor to meet you. And
my pleasure to meet you.
Yeah, so I'm very interested in talking to you. I've done some due diligence and read about you. I mean, if I went over your CV and everything you've done and your life's work, it would take the whole interview. But I just want to let our viewers and listeners know that you have served 4 presidents, and I'm going to share my screen because we're going to be talking about a few things here, and that you're known as one of the 100 most influential geopolitical experts on the planet, and that your first job in government, if I'm correct, you broke in with the Kennedy administration.
Yes.
So, okay. So, I mean, with all of these achievements and your life's work, what would you say has given you the most satisfaction with what all the different things that you've done, Harold?
That's a hard one because coming to government service was really exciting, and one way or another, I was given the opportunity to make a lot of decisions and learned about power in Washington, and that was a big high point. But in subsequent years, when I decided I was tired of bureaucracy, I began to work with CEOs of really big companies.
Okay.
And that was pretty exciting. I mean, I was brought in to rethink the future of IBM in 1980, in a huge rethink. They didn't follow my advice, but it was exciting. And I worked with one of the world's biggest manufacturers, actually for decades, Toyota, on its worldwide deployment. So those experiences, several other big corporations, were a different kind of highlight because they gave me a personal view of how the world works as seen from inside giant enterprises. And since then, I've been brought in for work with sovereign wealth funds. And that was pretty exciting. Like, how do we deploy money in this confusing array of public and private business? So I don't know which was the most exciting. I'm trying now in my later years to kind of roll it all into what have I learned, and talking to you is part of this process of what have I learned.
I appreciate that.
A new institute has been created in my name.
I'm showing it right now, Harold. I'm showing it on screen right now.
Yeah,
the
I see it.
Malmgren Strategic Institute.
Yeah, right now it's headquartered in Switzerland, but we're gathering some pretty formidable people from different countries who are, let's say, thinking with me about where the world is going in the next 2 or 3 decades. So where technology will take us, where digitalization will take us. So
okay,
using all this experience to look forward now.
Yeah, I mean, for me to look 2 or 3 days forward is long term. Yes, Steve.
Dale, if I may interject, since Mr. Malmgren had also had the experience of working for so many years with Toyota, perhaps he's also the right person to ask what his opinion is about Tesla when you get to that.
You could do it now. So go ahead, Harold. EVs versus combustible.
Yeah, Toyota was a model of comprehensive organization of machines, people, logistics. I mean, they were the first to really emphasize just in time. Tesla is a brainchild of one person, and it keeps expanding. It's a brain that keeps expanding, but it's also scattered all over other issues. And to me, it's an elusive creation that simply has no coherence. It's entirely dependent on one brain, and that is not an organization that can survive.
Interesting. Okay, and sometimes that brain can be a bit erratic as well. So, yeah. So you're a big believer in teams and communities and collaboration, then, Harold. And
yes.
these people that want to be autocratic, whether it's in government or business, they are at a disadvantage because they only have one brain, 2 eyes, rather than collaborating with people to get the views. I call it intelligence gathering. Has that been a big part of your career too, by being open to listening to other experts and helping you formulate your opinion through people's work that you respect?
Yes. I've always believed that teamwork was essential to accomplishing anything, whether it's in politics or in concrete business, construction, or just organization. Nothing gets done unless it's done in some form of organized effort. Single people or single points of decision making don't work. Now, the most vivid example was the old Soviet Union. I had the chance to go to the Soviet Union with Kissinger and George Shultz and others in 1973. And for various reasons, I was asked aside and said, is there anyone I'd like to meet? And I said, I'd like to meet the boss of Gosplan, which was the central planning unit for the Soviet Union. And they arranged a private lunch. And I did meet with him. And after he explained how it all worked, I said, but how can you trust any of the numbers you get? And he said, I don't. I fly around and open and close of warehouse doors to see if they're lying. And occasionally I zap somebody with prison time or worse. So that's how our system works. I said, your system is not sustainable. You cannot centralize that much. It's too big to manage. So I'm giving you that example because it applies to China. China is now moving towards higher centralization. It's not sustainable. At some point, it will all be one decision system, and it will break down. I do believe you have to do this by teams, all the way up from bottom, and that's how everything works. Politics, business.
Okay. Well, you know what? Why don't we, since you brought up China, and I've read some of your stream on Twitter, and
Right.
you do have some beliefs that, everyone's talking about China's ascension, the yuan or some other new currency. But what really caught my attention, Harold, was this tweet here. Is an historic dollar short squeeze coming soon? Because this is our wheelhouse. It's FX. And I've said to people, no one can come up with a bullish narrative for the dollar. Everyone's talking about what the Fed has done and deficits, and we've been talking about the death of the dollar. I'm no spring chicken. I'm in my mid to late 60s, and the dollar is still here, although it's been under pressure, a lot of pressure this going into the end of the year, and we're getting a pretty good bounce here. So what's your thinking behind a dollar short squeeze? Is it going to be based upon risk off of asset deflation, where people just go to the dollar as a safe haven? Or is there any other dynamic that I'm not aware of in your narrative for this possible scenario?
I think you have to begin with the dollar relative to everything else, because that's your theme about foreign exchange is relative to what. So we have, yes, dollar weakness at the present time based on the risk analysis among various assets in a Federal Reserve or central bank made market. But just step back from all of this. What is the outlook for Europe? Continental Europe looks to me headed into a prolonged recession, not a short-term virus recession, but I see weakening export capability of Germany and its partners. I think the Eurozone is in severe trouble. And so if you want to be in a stronger currency, you can't go there, because I see the euro temporarily strong, but in the longer term, weakening dramatically. Then sterling, well, that's an oddball case. I think everybody has assumed that Brexit hurts, but I'm not so pessimistic about sterling. But it's not big enough by itself to be another alternative. So then we go to the renminbi or the Chinese basic currency. And China, to me, the economy looks like it's growing because they measure it by output, the industrial output. They give everybody a target. And of course, everybody meets it, because if you don't meet your target, you get punished. But they're producing a lot, but the demand is clearly deficient. That they're not absorbing what they're producing. And so big debate inside China at the highest levels now is, how do we expand domestic demand? And if we can't get more money out to the people, then how do we expand the state-owned enterprises? That debate is not much discussed in the press. but they
What do you
are
think
they're
their
really moved up.
plans are? Expansionist ideas? I mean, they built up those islands in the South Sea. They still believe Taiwan is part of their country.
Yeah.
And since you are, you know, a geopolitical expert, what do you see on the horizon, not just economically, but geopolitically for China and the rest of the world?
Well, boiled down, I believe China's growth is slowing down. They'll be lucky to get much above 2% growth for the next several years. And in addition to all the problems, they're going to have to spend more on defense if they're going to keep being so aggressive worldwide, and that will take funds away from the rest of the economy. You know, modern warfare is really expensive. But
Yeah.
they have a one-child policy. Their population is now headed for slow decline. So they can't look for that to be a driver.
Okay, so poor demographics are part of it. The debt structure, for years, people have been showing ghost cities in China, Harold.
Yes.
That was part of how they were able to expand. Do you foresee this is kind of a Cold War that we have going on between the US and China? Do you see that ameliorating should and if and when the Biden administration takes control?
It's popular in the press to say that it will ease off, but I don't think so. China has been super aggressive alongside, not with Russia, but in parallel with Russia in probing our cybersecurity and stealing from the US. It's impossible for Biden to soften up, but he has to harden up.
Okay, so what do you think the potential, can we keep a Cold War going without it becoming hot? And are you a believer that Russia was behind this hack that wasn't discovered 8 months?
Yeah, well, as for Russia, yeah, I mean, I you know, after all these years, I know a lot of people in intelligence, not only in the U.S. but around the world. So as for me, I'm unbiased. I don't have a party politics orientation on this or what Trump said or didn't say. I fundamentally believe Russia has gone a little bit out of control, experimenting and trying to penetrate our systems and manipulate them. And so now China is doing it, but for different reasons. China is trying to basically vacuum up as much technology as it can from US and European companies. So dealing with that is going to be very expensive, and it's going to lead cybersecurity effort, not only in the military security area, but the same lessons are going to be applied to private enterprise. So we're going to see a revolution coming in cybersecurity in business. And it's going to come pretty fast. I would say next 4 or 5 years, we're going to see big developments.
Okay, so are we heading towards a scientific dictatorship, Harold, where they know everything? And part of this could be, you know, I wrote a poem when COVID first broke out that, you know, it would be the excuse for everything, even though it's serious and we've lost many lives. Is this going to be the way through contact tracing and AI and cyber that we're going to continue to lose a lot of our privacy and freedoms that have been eroding since the Patriot Act after 9/11?
Yes, well, you put your finger on the most important question for the next few years. On the one hand, yes, authorities will be able to see more, and what you think is private is going to be smaller and smaller. And if we go towards digital currency or cashless society, it's going to be a big leap into almost no privacy regarding how much money you have and where you have it.
Do you think we're headed that way, Harold? Is that why the governments let the Bitcoin experiment continue, to get people accustomed to the digital world and the war on cash, so that
It's,
they do. Go ahead.
yeah, it's moving in that direction. I'll tell you who's the quiet leader is the Bank of England. The Bank of
Interesting.
England has been working with all the Commonwealth countries, big and small, not only Australia, but little places like Malta or Bermuda. They've been working now several years, and they're well on the way to digital currency for that complex. They cooperate a lot with Bank of Japan and with the Fed. Fed has a lot of research. It's going in that direction. I'll tell you why. Because every government, local, regional, national in the world is heavily indebted and short of revenue. And they're all looking for, is there some way we can tap all that liquidity that's running out there, but doesn't seem to reach ordinary people? Can we do it other than through higher taxes? And the answer is, yeah, you can get at everybody's account. So that pressure is going to build and build. It will end up with crushing Bitcoin in favor of national currencies. However, there will be pushback. And there's where this, whether the market economy can work or not depends on how strong the pushback is. What I fear is we've allowed too much concentration at the top. So we're becoming like the oligarchy of Russia. I mean, a handful of businesses in each field is dominant. We're getting too centralized. That's where the real problem is. So the battle with digitalization is going to be about oligarchies versus governance broadly.
Okay, so basically you're a believer that digital currency democratizes economies?
No, it probably allows people at the top to run everybody's affairs. I'm very afraid of where it's going, but I don't see the counter pressures because the oligarchies or the highly concentrated companies in the U.S., let's say, seem to be just thriving passively on making money without thinking where this is heading.
Okay. I just want to switch gears a little bit since you saw the whole development of this happening with the centralization of markets by central planners beginning in earnest really after the 2008 Great Recession and continuing on through QE and central banks taking away markets. They've entered corporate bond markets and junk bond markets. Your view on the Fed and whether or not it's going to lose its grip. There are some senators challenging Fed powers. What do you think the future is for the Fed, Harold?
Well, everybody in the foreign exchange markets is keenly interested in that question. I think the Fed has already lost control, essentially starting with Bernanke, this open-ended flooding of the market. Had various names, QE 1, 2, 3, and so forth.
TARP,
TARP. And then under Powell, openly buying any kind of corporate debt.
Way beyond its mandates.
Way beyond. They could easily have, for let's say the fallen angels in the debt markets, they could easily have set up a resolution trust and scooped up just the decay, restructured that, but not buy all the debt. So instead of buying the zombies, it's out of control. There is no market left. And Fed can't really back out of this. I don't care what the Congress says. The Congress doesn't want a market crash that they cause. So they're not going to be so restrictive to the Fed. The Fed is a kind of monster without control. And there is no basic philosophy. I've listened to Powell explanations, and there's hardly any truth in any word he says, but I'm not sure he is lying. I think he's in over his head.
Okay, so Paul's in over his head. A lot of people are drinking the Kool-Aid,
Yep.
And, I have to talk about that. I've been around the markets for over 4 decades myself, Harold, and I've never seen a crash with a recovery occurring at such a rapid pace. I'm wondering if you think that markets right now have become kind of like the Tower of Babel, and it's what everyone is more interested in. In fact, the people are still voting their pocketbook, and 70 million, 74 million, I believe, voted for President Trump so that their 401k would remain intact. That was their belief. And they didn't like the fact that higher taxes would come with Biden. So with everything going on here in America, and we've never seen this happen on a transition of power before, do you think that we're going to have a peaceful transition, or is it possible that the United States could be looking at National Guard troops on the street before this is over?
It's a good question, but let me just say, after watching so many different administrations transitions since I came to Washington at the beginning of the 1960s, each new administration has a learning period of how to get things done, and it usually takes 18 months to 2 years. I don't expect Biden administration to be any different. Passing a new tax law can't be done overnight. It's so complicated. Rewriting, I worked for the Senate Finance Committee at some stages of my life. It's just so elaborate. So many different people are involved, so many lobbyists, so many lawyers. I don't expect dramatic change. I don't expect a big sweep from right-wing something to left-wing something. I don't think the progressives will take control in the Democratic Party. And I don't think the Republicans are going to be very organized. The ones who got reelected in the Senate, they're already thinking about 2026, 6 years from now. They're less and less interested in the debates of the last year. Everything is different. I think we're going to see McConnell and Biden coming to working arrangements just the way that Senate and President used to work years back.
Sure. Remember Tip O'Neill and Ronald Reagan would have a drink together.
I think McConnell likes Biden and vice versa. That's just an old relationship. They'll go have a whiskey in some hidden place and work things out. The big problem for Biden will be the House, where he's got all these people radically to the left versus the majority of his party, which is more centrist. And that's going to take a while to work out. I think it can be managed. And the way they'll do it is they'll use the House Appropriations Committee to squeeze each individual progressive. If you remember the House, you got to get money for your district. And that's when the Appropriations Committee can turn off the tap if you're not cooperative. So, but that all takes time. So I don't see sudden, abrupt, big change. I see, transition that takes time. The markets are too focused on something dramatic happening tomorrow morning. It's not going to be that quick. It's going to be more like next year and the year after.
Okay, are you optimistic that we're going to come out of this COVID situation? Now there are mutations and lockdowns, and I don't remember things being as difficult when I was around in the last pandemic in 1918. And neither of us, Harold, were around for that one.
No.
What do you think is going to be the outcome of COVID-19 or COVID-20 with the mutation? How do we get out of this? Is it going to be that strict control and strict lockdowns that happened last spring in Europe that really never happened here? Will Biden be more open to shutting down the country completely?
Well, that depends on how well we manage this infection rate. And this
We're
new
not
form of
doing it well, are we?
No. The President Trump just didn't address it as a national issue. Hopefully, some kind of national approach can be developed. But in my view, since the virus really began to get a grip, my view was very simple. We're not going to have a V-shaped recovery because if the labor force is being restructured, a lot of people who were working in Manhattan are now going to be working from home. Right. That's permanent. And a lot of people who were employed in small business, they're out of business and they're not coming back. It's going to take time to reconfigure our economy. I don't think there's any V-shape coming. It's everybody's delusional and thinking we're going to have a quick rebound. We are going to have a slow climb and a reconfiguration of where we make things, where we work, and how to manage the permanently unemployed. And that number is going to stay big. I'm not surprised that the applications for unemployment are rising again. No surprise to me. I never expected otherwise.
Okay, well then let's wrap it with what you're most known for, being a geopolitical expert. Is it peace in our time, or what keeps you up at night geopolitically that could possibly turn into some type of conflict with our adversaries?
Well, I think that the Russians like to toy with the U.S. here and there, but they're not going to have direct firefighting with the U.S. because they fear overwhelming defeat. So let's set the Russians aside. The Chinese, it's a very big country, hard to manage at one point, and a leader who's got too much power and now may have to show his teeth just to stay in office. And so China is very hard to calculate. Will they conduct conflicts with neighboring countries and agitate the US and we protest? Or will they do something bold like reach for Taiwan? That would involve the US in defending Taiwan.
Right.
But I don't see a massive intercontinental war. It's too expensive for both sides, too destructive for both sides. Chinese don't want, they don't want self-annihilation. They are fundamentally not as strong as the US militarily. So
okay, so Harold, maybe it's a blessing in a way, the divisions and national strife that most nation states have with the polarity and the divisions in their society, that they'll be so busy managing their civilian populations, they won't have time for adventurism.
Yes, and they won't have the money. Adventurism is very expensive. Nobody has money for big military adventure.
Well, you know what, Harold, it was an adventure talking to you for 30 minutes today.
Well, thanks for inviting me along.
I really enjoyed it, and perhaps we could get together in the new year and see how things are developing globally, and appreciate you taking the time. I want to wish you and your family that you remain safe and have as merry a holiday and New Year as possible in this world at this time.
Same for you. I'm getting older, but somehow I'm still perking along, and so.
Well, there's a Bob Dylan lyric, Carol. Tell me what you think of this. I was older then, but I'm younger than that now.
Yeah, no, that's
you like it? It's pages.
Personality.
All right. Nice meeting you. Nice meeting you, Harold. Thank you so much. And
happy holidays.
Happy holidays to you as well, my friend. Adios. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. Hope you enjoyed our interview with Harold Malgrim. You can follow him on Twitter and his writings at Hal's Rethinking. Think at HALSRETHINK. And see everyone tomorrow. Good hunting the rest of the day. Okay, where is it?